Good evening, everyone. My name is Nakasia Paka. I am the founder of Black Girls Link. I just want to remind everyone, please continue to keep your videos off and your volumes muted throughout the presentation. It is my great pleasure to introduce you and introduce my dear friend Adesua, and also to be the host of this event. She's going to be talking about credit card scores and credit card debt, and she has a background of over 15 years of financial experience. And we all, I think, it's important for us to have a discussion regarding this topic, especially during these times and this current pandemic and the economic crisis that we're all dealing with right now. So if you have any questions throughout her presentation, please write them down in the chat. And at the end, we'll do a Q&A section, and then that's when I'll ask her those questions. So any point of the presentation you have a question, please put it in the chat directly to me or to everyone else to start thinking about the question that you may have. And so I would like to hand this off to Adesua so she could give you a little bit more background about herself and also get started on the presentation.
Hi, welcome everyone. Thanks so much for joining us for this presentation today. Today we're going to talk about how to fast track your way out of credit card debt. So the first question I have for everyone is, does everyone know what a credit score is? Maybe you even know your credit score.
So Adesua, we have some questions. We have some answers actually in the chat. Majority of them have an idea of what a credit score is.
Okay. What are they saying?
One of them are saying is how you are how you are graded financially.
Absolutely. That's correct. Yes.
And that is all the answers for now. The majority of them are just saying yes,
okay.
yes.
Well, that's absolutely correct. Your credit score is a reflection of your creditworthiness. So your credit score is used when you go and try to get a mortgage, a student loan, a car loan, even if you want to get employment. Your credit score may be used for that as well. If you go to try to get insurance, to pay for insurance, your credit score is used. So it is a measure of your creditworthiness. That is correct. So let's talk about how your credit score is calculated. Essentially, this is how it's broken down. So 35% has to do with your payment history. So one of the things you'll hear me stress time and time again is that you have to pay on time. If you want to have a great credit score, you've got to pay on time. Another portion of how your credit score is calculated is your credit utilization. So your credit utilization has to do with how much credit card you have available to you and how much you've used of what's available to you. For instance, if let's say you have a credit card and you have a $10,000 credit card limit. If you use $8,000 of it, you have a very high utilization, which means your usage of your credit card. So you want your utilization to be as low as possible. Some other factors that have to do with your credit score and how it's calculated are your credit card age, the age of how long you've had your credit card, how long you've had your car loan, how long you've had a mortgage. This also affects your creditworthiness and it affects your credit score. So some other things that aren't as impactful, but it's important to note, are if you have different types of credit. So if you have a mortgage loan or if you have a student loan, these are different types of credit. And the more different types of credit that you have, the higher your credit score. So you want to essentially diversify your credit types. And then also you want to keep in mind that when you go and have multiple inquiries into for usage, like for instance, let's say you'd like to get a mortgage and you go to a lot of different banks to get a credit score and to get the interest for your mortgage rate. That Those are hard inquiries on your credit score, and they can potentially reduce your credit score. So let's talk about the range that we would all like to be in. Let's try to be from 720 to 850. In general, your credit score ranges from 300 to 850. 300 to 629, this is perhaps if you've had lots of charge-offs, bankruptcy, essentially you haven't been paying your credit card on time. 630 from 689, this is fair credit, but you may get denied for a loan. You'll have very high interest rates, so this isn't where you necessarily want to be. 690 to 719, you may still get a loan, but the interest rate might not be advantageous to you. So you really want to try to get your credit score in the 720, 740 to 850 range. Can anybody name the major credit bureaus? I'll give you a hint, there's 3 of them.
All right. It seems like they got all 3 of them.
Oh, wow, great.
Yeah.
So Equifax, Experian, TransUnion, these are the 3 major credit bureaus. Why do I mention this? Well, it's important to note that they all calculate your score differently because they're all using different information. This may surprise you to know that the credit bureaus, although they all collect consumer information on you, they may have different sources of information. So TransUnion might have your medical bills, let's say if you haven't paid them on time, but they might not show up on Experian. So it's important to note that depending on where you go, where you do your banking, if they pull a certain report, it might be higher or lower, depending on the information that particular credit bureau has on file for you. So let's talk about your credit report. Your credit report is what the credit bureau agencies compile, and it shows all your outstanding debt, your payment history. It has your social security number on there. It has your personal information. It may have multiple addresses if you've moved in the past few years. It's important to note that for your credit report, it may contain errors. Why do I mention this? I mention this because your credit report is what is used to calculate your credit score. So it's important to check your credit report just to make sure that everything is correct. Because if something is incorrect, you can get it fixed and potentially increase your credit score, which is what you're using. So it's important to note that you can check your credit report. Your credit report also shows any collections or any charge-offs. And this can be done for free. You can check your credit report for free. And it's important to check it regularly. So let's talk about your credit score. So most credit scores are FICO scores, honestly. It's used by most of the banks, most of the lending institutions. Your Vantage score was actually created by the 3 major credit bureaus to compete with the FICO score. So some things to note as a consumer about your FICO score is that your FICO score has a 45-day credit inquiries window, whereas your Vantage score only has a 14-day credit inquiries window. So you may be asking, what does that mean? So essentially, as I mentioned before with the hard inquiries, if your FICO score gives you a longer span of time to essentially go shopping around for the lowest interest rate, let's say you want an interest rate on a car loan or mortgage, it allows you more time, whereas your Vantage score will decrease within that 14-day window if you continue to shop around and look for the lowest score. So it's just something to keep in mind. So now let's talk about how to increase your credit score. I cannot stress this enough. What you need to do to increase your credit score is to always pay on time. Remember that 35%? 35% of your credit score is your payment history, is you paying on time, is you paying more than the minimum on time. It's so critical. Another thing that you need to keep in mind in order to increase your credit score is to keep your credit card balance less than 30% of your available credit. Why do I mention this? Because of your utilization. You want to keep your utilization, especially of credit cards, to less than 30%. It's also important to remember not to request credit, a lot of credit in a short period of time. So you don't want to go out one weekend and try to get 10 credit cards. This is going to decrease your credit score. This is also not a good idea. So don't do it. So one of the things it's important to note is, as I mentioned before, there's a 14 or 45-day window. And if you have multiple hard inquiries on your credit score, it can reduce your credit score. So just keep that in mind. All right, some other things to keep in mind is that you can actually get one free credit report from each of the 3 credit bureaus that we mentioned earlier. So you can go to the credit bureaus directly, you can go to annualcreditreport.com, but you should check out this credit report. You should really take the time to look and make sure everything that's on that credit report is correct, is debt that you actually owe. And if it's not, you should write to them and have them fix it so that it can increase your credit score. One of the other things to keep in mind is many banks and credit card companies will provide you your credit score for free. So if you plan on getting a mortgage, if you plan on getting an auto loan, it's important to know that for free, you can go and you can go online, sometimes attached to your checking account. You can call up your credit card company and you can find out your credit score. It's also important to note, although nobody wants this to happen to them, is if you are declined for a loan, that lending institution has to, by law, provide you with your credit score to essentially explain why you were denied. So let's talk about how you get out of credit card debt. How you get out of credit card debt and have healthy financial habits is to set your financial goals. So what are your financial goals for yourself? What financial plans do you have for yourself? Do you plan on buying a car or going on vacation? Everybody needs a vacation given everything that's going on with COVID. What do you plan on doing financially for yourself? What are your long-term goals? Do you plan on retiring or buying a house? Or it's important to jot down what these goals are, because all of this has to do with you getting to those goals. So we're taking these steps, we're paying down this debt, we're increasing our credit score, we're checking our credit report, we're doing this so that we can achieve those financial goals. So it's important to keep in mind that in order to manage your debt and to get out of debt, you have to manage your money. You have to take control of your money. You have to know where your money is going. You have to budget. So let's talk about what you need to do to budget. In order to budget, it's important to look at your income and to look at your expenses. I think everyone knows that. So let's kind of take a further step and really look at our income and think of ways to increase our income. Can we rent something out? Can you rent out your car? Can you rent out your apartment? Can you sell things? Really kind of dive deep and really think about ways you can increase your income. Are there ways that you can reduce your expenses? Can you bundle your expenses? Can you cut back on your expenses? So really take the time to create a realistic budget and create goals for yourself and stick to that budget. You want to make sure to include an emergency fund. A good idea, a good rule of thumb for an emergency fund is to have at least about 3 months to 6 months in cash on hand for emergencies. So you want to keep that in mind when budgeting. So now, this is the fun part. You need to face your debt. You need to take a look in the mirror and really jot down and open those statements and really dive deep and really look at what it is you owe. For instance, let's take a person. Let's say Keisha. Let's say Keisha has a Citi credit card of $10,000 with 21% interest rate, and a Bank of America credit card of $6,000 with a 10% interest rate. And let's throw a student loan in there for $10,000 with a 6% interest rate. It's important that she writes this down, that she takes note of this, and that she faces her debt. She doesn't estimate. She goes, she opens her statements, and she writes down exactly what she owes. So let's talk about how to fast track your way out of credit card debt. The key here is to face your debt and to stop using your credit card. In order to get out of debt, you have to stop creating debt. You have to stop increasing your debt. So you want to stop using your credit card. You want to use a pay down calendar where you pay down a specific amount of money so that you can have this paid off in keeping with your financial goals. You want to stick to that pay down amount. You don't want to lose motivation. You want to stick to that pay down amount, and you want to keep track of your progress. So let's talk about your pay down calendar. So for instance, let's take Keisha. So these are all the items that she owes. So if you look at the interest rate and you look at how much she has to pay, the payment amount, and then you see that she can pay this off in 3 years. So one of the things she doesn't want to do is she doesn't want to pay the minimum payment on her credit card. She doesn't want to continue racking up more credit card debt. And she wants to stick to the payoff amount, to paying that amount every single month. Now, some of you may be asking, well, how do I determine what my payoff amount is? You can email me. I'm happy to work with you one-on-one. I use Excel, but you can use so many other products out there. Mint, YNAB, there's so many products that you can use to calculate what your payoff amount is. So you want to keep track of your payment amount. You want to always pay on time. And in order to help you keep track, if you want to put it on the refrigerator, put it on the refrigerator. If you want to put it on in the calendar on your phone, do whatever it takes because you are fast tracking your way out of credit card debt. So one of the things a lot of people don't know is that you can actually call up your credit card company and ask them to reduce your interest rate. So you can call and negotiate a lower interest rate. So I suggest that you stick to your payoff amount and then you give them a call and you reduce your interest rate. This will save you thousands of dollars. One of the other things that you can do in order to fast track your way out of credit card debt is to pay earlier than the due date. So paying earlier reduces the amount of interest that you are being charged because you're paying it earlier. It also helps your credit score because remember that utilization, the sooner you're out of credit card debt, the higher your credit score goes. So paying earlier is a great way to get out of credit card debt and really help your credit score and help you long-term financially. Another thing to keep in mind is that you don't want to decrease your payment. One of the things you may notice on your credit card statement is every month your credit card payment decreases just a little bit. This is called the vanishing minimum. This is that minimum payment. You don't want to pay that minimum payment. I cannot stress this enough. Do not pay that minimum payment. You will be paying your credit card for years and years, sometimes even double or triple the amount of time if you just stick with your pay down amount. So keep in mind, do not pay that minimum payment. Also, one of the things to keep in mind is you want to take your credit card out of your wallet. So remember how I discussed that in order to get out of credit card debt, you have to stop using your credit card. So one of the easiest ways to do that is to take your card out of your wallet. You want to stop any automatic charges that are hitting your credit card. I've had clients who have said to me, oh, I took my credit card out of my wallet. I've stopped using my card. And then I look at their credit card statement and everything in their kitchen sink is hitting that credit card statement. You know, they've got, phone bills and utility bills, everything's hitting that credit card. That if you're still using your credit card, if there are automatic charges that are hitting your credit card, you're still using your credit card and you're still increasing your debt. So you want to stop those automatic charges. Have them automatically get withdrawn from your debit card or your checking account, or pay them online, however you choose to do that, but don't have them hit your credit card. And it's a good idea, it's a good rule of thumb to pay your highest interest rate first. So remember, keep track of your progress monthly. Don't get discouraged if you have a bad month, if maybe you couldn't pay the full amount, your payment amount that you've been paying for 3 months or 6 months. Don't get discouraged. Keep going. And it's also good to note that you want to cut it up, don't close it down. So what do I mean by that? Essentially, what you want to do is you want to cut up that credit card, but you don't want to call and close that credit card line. Why? Because that reduces your credit score. So we want to do things that increase our credit score, not decrease our credit score. So it's important to stay motivated and always remember your financial goals. So let's talk about some very important things that you need to know if you have a credit card, if you have a credit score, that you need to do in order to prevent identity theft. One of the things you want to be careful of is you don't want to give your social security number or your personal information out to anyone that calls you. You want to check your credit report regularly. So let's say every 4 months, check a different credit report with a different credit bureau. Remember, you get one free one from each of the credit bureaus. So this is free. Go ahead and check that credit report. It's important. Also, a lot of people don't realize, but identity theft oftentimes than not actually happens from family and friends. It's not happening because somebody hacked into your phone or hacked into your computer. It's you essentially gave your credit card to a family member or a friend, and they went on a shopping spree, and now you're on the hook for that debt. So you want to keep your credit cards to yourself and not give them out to your family members or your friends. Also, it's important to shred credit card offers, bank statement, and other confidential information. So some other important things you can do. This is also if you become a victim or just to prevent, you can consider doing a credit freeze. This is free. And it's essentially you can contact Experian, Equifax, TransUnion, and you actually only have to contact one of them, and they will, on your behalf, go ahead and contact the other credit bureaus. And essentially what it does is it limits your access, limits other companies' access to your credit. So they can't access your credit, they can't open new credit. It's essentially a freeze. No one has access to your credit. So it's something to consider if you think your credit might have been compromised. Also, it's important to note that you can also use bank alerts. Many banks offer the option to text you if there's a purchase that is out of the ordinary, and you can contact your bank immediately, and that way you don't lose money, and it prevents identity theft even while it's happening. And so it's just a good rule of thumb to have that option available to you. Are there any questions?
Yes, we have plenty.
Oh, wow. Okay.
So, one question that someone said in the chat: will your Vantage score be close to the range that your FICO score is?
Yeah, so it's about the same range. Before there actually was a larger variance, but they're kind of streamlining it, so it's usually between 300 to 850 is usually for your credit score.
And another question: why is the Vantage score sometimes
okay
from the FICO score?
From the FICO score? Okay, so there's many reasons. So your FICO score is done by your Fair Isaac Corporation, which is essentially from your credit report, but it depends on which reporting agency the information is coming from. So that could be why your FICO score might be different from your Vantage score. But also the Vantage score is actually calculated slightly different from your FICO score. So there's actually a lot of reasons. So the percentages are a little different than the ones that I discussed earlier. And also your Vantage score takes information that your FICO score might not have access to. So your Vantage score normally has a kind of a broader base of information, It takes information from utility bills and some other bills that your FICO score may not necessarily have that information, and then thus your calculation might not be based off that information.
Okay, great. And what about Credit Karma? Is it a good place to check out your credit score? Is it a reliable source?
Absolutely. Yeah. Yeah, you can definitely use Credit Karma. You can use Bankrate. But what I suggest if you want to check your credit score is, what bank do you bank with? Many of the major banks offer your credit score, and they even offer information as to how your credit score is calculated. So I would actually start there first.
And when did this begin? Did you get reported debt such as medical bills erased from your credit score if you paid it off within a short time span?
I'm sorry, I didn't quite hear that question. Go ahead.
All right, sorry. Could you get
Okay.
a
No, sorry.
reported debt such as medical bills erased from your credit score if it's paid off by a short time span?
Um, the way to get medical bills off your credit score, off your credit report, is if they're past the statute of limitations. So if they're past the statute of limitations, they really shouldn't be on your credit report. So that's a way to get them off. And there's also, you can, if you want to settle with the institution in which you owe money, it may be a good idea to call them directly and see what you can negotiate, so that they can communicate that this is paid off and not a charge off, but completely paid off. So that's also an option as well.
So, a follow-up question: what's the statute of limitations on medical bills and stuff like that on your credit report?
Okay, it's 6 years for New York. So it's not based on the bill necessarily. It's based on the state that you live in. So if you live in New York, which I'm just gonna make that assumption, it's 6 years.
Okay. And how many credit cards do you recommend someone having?
That's a good question. It really depends on your situation, what you're trying to do. I don't recommend more than 2 credit cards. If you happen to use credit wisely, if you want to use rewards, feel free, go ahead. Are you trying to build your credit? So I apologize, but I think I'm kind of, it really depends on what you're trying to do. And that will determine how many credit cards you may or may not need. But you really shouldn't need more than 2.
And a follow-up question on a previous question. What if
Okay.
the debt is incurred in another state? Do we have to look up the law within that state to figure out the statute of limitations?
Yeah. So it's based on the state. It's definitely yes. So it's based on the state, and every state's different. So if it's New Jersey, it's also 6 years.
Okay. And if you stop using your credit card, will they close it?
If you stop making purchases on your credit card, it is possible that they will close it, but it's more likely that they'll just send you a new credit card. They'll send you credit card offers. They won't necessarily close your card just because you're not using it.
All right. And plenty more. Are there any hidden? Oh yeah, it's great. But next one is, are there any hidden pros and cons over secured cards or unsecured cards?
Okay, so I don't necessarily recommend secured cards because they're incredibly costly. I will say that honestly, if you have a very low credit score, they do help you to increase your credit score, but they're a very costly option, so it's not something that I recommend. Instead, if you have a friend that has a good credit score, you can be an authorized user on their credit card, or you can continue to pay your debt on time. If you have any charge-offs, you can, although this won't increase your score immediately, you can continue to pay that down. Those are kind of the ways you can increase your credit score if you happen to have a low credit score.
And a follow-up question.
Instead of using a secured card.
Oh, okay.
Yes.
A follow-up question. Can you explain the difference between the two?
So essentially, a secured card, you essentially pay money for the credit card institution to lend that money back to you. So you put money on the secured credit card and then you use the credit card versus a credit card where you're just getting an extended line of credit and you're using that credit. So you're using someone else's money versus using your own money. And that's why it's costly to use a secured credit card. So that's not something that I recommend.
All right, great. Next question is, when is the right time to ask for a credit line increase?
It's a great time to ask for a credit line increase if, let's say, you've had an increase in income, if you paid off a certain amount of debt. So your credit score is increased, you're likely to get approved. If you have, like I mentioned, if you have an increase in income, you're more likely to be approved. If it's just been a couple months and nothing's really changed with your credit or with your credit payments, with your credit history, you may not be approved for a credit line increase. So I would recommend doing it if you have an increase in income or if your credit score increases.
Next one, how do you prove your debt? How do you prove your debt to income ratio if you have off the books income?
Well, you essentially, you should have some receipts or, in order to prove your income, everyone banks normally use and want to see a W-2. If you don't have a W-2, you're right, it is difficult. But they essentially look at your taxes. So they look at the income that you're reporting on your taxes, and they look at any receipts of those sales. So any kind of substantial proof of that transaction. But they essentially just look at your taxes in order to validate your income.
Okay. And next question, with student loan debt and no credit cards, what advice can you give to improve your credit score?
You don't need credit cards. That's kind of the myth that you need credit cards to increase your credit score. You need to have a mix of debt. You need to pay your bills on time. So one of the things that you should do is practice good financial habits, which is don't overdraw your checking account. Make sure to pay all of your bills on time. If you continue to pay your student loan on time, that's going to help your credit score and your credit and having a good credit score. Also, are you shopping for a car? If you happen to have other types of credit, don't get a car to increase your credit score. But if you happen to have other types of credit, that will also increase your credit score.
Okay, next one. Are balance transfers beneficial if they increase your usage to over 30%?
Okay, so that's not why you should do a balance transfer. You should do a balance transfer to get your interest rates down. And I only recommend that if you have been paying your debt on time. So you shouldn't be using a balance transfer to focus on your utilization. You should be using it to get your credit card debt down, your interest rate down, the cost that you're being charged for your credit card debt. You want to get that lowered so that you can pay that off, so that can help your credit utilization, and so that can help your credit score. So that's the way to go about doing that. You don't want to just increase your credit line because it increases your credit utilization. It will, Depending on the situation, it might help slightly, but that's not the best way to get out of debt.
All right, the next one is Credit Karma gives me one credit score and my bank gives me another. Which score should I rely upon and look at?
Okay, so one of the things I mentioned earlier is your FICO score versus your Vantage score. If you can tell if one is your FICO score, I would rely on your FICO score. But I would hesitate only to say that it's important to remember, and this is one of the things that I mentioned in the very beginning, you have different credit scores. If you go to the different credit bureaus, you're going to see a different credit score. So that's why my second slide, it was the range. You just want to make sure that you're in a very good range. You're in that 740 and above. That's where you want to be. Anything kind of below that range, you want to kind of find out why and take the steps. To push that score up. So I would rely on something that's a FICO score, but I would also focus more on looking at my credit report to seeing what's on my credit report, making sure it's accurate, and making sure my credit scores that I'm pulling are 740 and above.
All right. You mentioned earlier in your presentation that we can negotiate your interest rate of your credit card. How do we go about doing that?
So I am happy to give you a script. Please email me after. I've done this several times to help many people save thousands of dollars. What you want to do is you essentially want to call your credit card company and you want to explain that you've always paid on time, that you've been a customer for X amount of years, and you want to negotiate that credit card debt down. And you'd be surprised how low they are willing to go.
All right, great. Another one. How often should I be considering different credit cards?
Okay, so I think what's important here is to focus on your financial goals. So you want to focus on what these credit cards and what this access to credit is going to do for me. What's it going to do for my money? So it's not about how many credit cards can I open, how often can I get a credit card. It's about how is this credit card going to help me further my financial goals. So you kind of want to take a step back and kind of focus on that in order to determine what you should be doing for your next steps.
All right.
If that makes any sense.
Yeah, and what is the difference between a soft pull and a hard pull?
Okay, so a soft pull is when you go, so as I mentioned, if you go to your bank and they offer your credit score, that's a soft inquiry. So you're not applying for a loan per se, you're just trying to investigate and find out what your credit score is. So that's a soft inquiry. A hard inquiry is when a lending institution, where somebody who's willing to lend you money goes and pulls your information from one of these consumer reporting bureaus and looks at your information. That's a hard inquiry onto your credit.
Okay. And are there any apps that you recommend that could help us, I guess, get out of credit card debt?
Absolutely, absolutely. I recommend that I personally use Excel, and I'm happy to share my template with you. Please email me. But I recommend Mint. It's a great way to help you get out of credit card debt. YNAB. It's literally stands for You Need a Budget. It's a great template. And some banks actually offer features that you can use to track your spending and to help you get out of debt and to manage your money.
And what is the best way to get your FICO score or from the bank? Going to the bank or a phone call? How do you go? What's the process?
If you bank online, many online portals actually offer access to your credit score. So you can go online, you can click there and get access. You could always walk in and ask what their policies and procedures are. I'm sure they'll direct you. They may direct you online. Or you can give them a call. Any way you choose, it will work, you know. But that information should be readily available online for most of the major banks.
All right, and what do you think about the apps Tally and Stash?
They're great apps. You know, you want to use something that's inexpensive and that you're going to stick with. It's more about making sure that you're using these tools to reach your goals. So you don't want to kind of go crazy and getting all these apps and focusing on like how many credit cards I've got to open and all these other things. It's all the sole purpose of all of this is to achieve your financial goals.
All right, and just telling the audience, please let us know if you have any further questions because we're about to wrap up very soon. But one person already had a question. I think they would like to work with you in the future. Can you actually spell out your email address? I'll definitely, for everyone that's listening, there'll be a thank you email to tomorrow with a survey, and it will also include her email. But for those who want to have her email now, go ahead and fill it out.
Sure, definitely. It's adeehi@gmail.com. So that's adeehi@gmail.com.
And is there a particular credit card that you recommend for someone? Like a personal question for me, but
That's a really good question. So I wouldn't specifically recommend, you know, a brand. I would recommend features. So if you get a credit card that has rewards, that has a low interest rate, that's a great credit card, and you should build that relationship, and you should keep that credit card. Some credit cards that come to mind are Chase. Chase has a Slate card, Bank of America. I mean, really, there are so many different options. You can go on Bankrate and actually go and look at the different interest rates and what credit cards offer you rewards, and kind of look to what may work best for you. Let's say you travel. So you'd want a credit card that doesn't have an international fee, so that when you go overseas, you're not paying that. There's a fee, a credit card fee, that a foreign charge fee, a foreign transaction fee, that you're not paying that card. Now, let's say instead of traveling, let's say you do something else, or maybe you're into sports. Maybe you want to have a credit card. There are many credit cards that have rewards and are great credit cards, and you can put your sports logo on it. So it all depends on what it is you like, but you just don't want to kind of veer away from your financial goals. It's not about the credit card. It's not about the credit score. It's about using these tools to get you where you want to be financially.
So I guess for the people that might be trying to negotiate with their credit card companies of their interest rates, what's a low interest rate and what's a high interest rate, and what should we aim to? Obviously the low. So what numbers should we aim to have?
Sure, definitely. So you want to have a credit score of 740. Why do I mention this? Because your credit score is going to determine your interest rate. So as long as you have a credit score of 740 and above, you're in a good spot to negotiate a very low interest rate. So when I say a low interest rate, honestly, I want you to have a zero interest rate. But a decent interest rate might be somewhere between in the single digits, so like 0 to 9%. A high interest rate, actually it's called subprime, there's actually a word for it, is usually anything from 17% and up. It's just in the double digits. So you want to stay out of that range, and you want to negotiate your way out of that range of interest rate, because you've got to remember that your interest rate is your cost. It's the cost of the lending institution. They're charging you for that money. So you want to have that interest rate as low as possible.
All right, great. Thank you. And it seems like we don't have any more any more questions, I think we might actually wrap it up a little earlier, a little early. And but thank you so much for this presentation, and thank you for everyone for actually joining. I hope you learned a lot. There will be an email sent out to everybody with a evaluation form, and also I'll be sure to make sure it includes her email address in case you want to use her for future services, and also just have a quick question to have her to ask if you couldn't think of any questions now. So thank you so much. Everybody have a great day, and I definitely recommend you guys basically registering for the next 3 events that we're having and next Tuesdays, 3 Tuesdays. I'm skipping the election, of course, but if you guys do not know, the next one will be about budgeting, savings, and investing. The next one after that will be about how to financially plan for a home. And the last one will definitely be a big one that majority of us probably have to go through is how to get rid of our student loan debt. So let's have those conversations and let's really be intentional about our financial goals. Thank you so much for coming. And please, please definitely fill out the evaluation form. It will take you no more than 2 or 3 minutes. Okay. Have a great day. Bye, everyone.
Bye.